Good morning, traders. Welcome to the new week. I wonder what's in store for us this week. Morning, lads. Good weekend.
Hello, hello. All
Hello.
good.
Right.
Deutsche Bank's still alive, so that's good.
Yeah, just about. How are you guys? All right? Have a good weekend?
Lovely weather here, so yeah, it was really good.
Oh,
You don't want to know, mate. You really don't want to know.
It's 4 degrees here at the moment and raining. and to top it all, there's been an oil slick in the local harbour down near us that affected all the beaches. Yeah, great news.
How was your weekend overall?
Yeah, not too bad apart from that.
Yeah.
How you doing, Mr. K-Man?
Yeah, not too bad. There seems to be a bit of an issue. The flow show is not announced on the ForexAnalytix page. So for all the listeners, well, I mean, if they can't log in, it's a bit stupid what I'm saying. But we should use the links. I'm going to.
Why? No. I see it here. Hold on a second.
I don't have it.
It was definitely scheduled for 10 minutes ago.
I don't have it.
What's that? The email?
The tweet. The tweet.
Yeah, the tweet. I see the tweet.
Yeah, but on our page.
What do you mean?
On our ForexAnalytix page, I don't see.
Oh, what? Really? Hold on.
What the button, weird. You mean?
The button.
Yeah.
I bet the clock hasn't changed.
No, but that one never changed anyway, did it?
Yeah, no.
Hold on. I'm going to look at this right now. So bear with me. No, it's there.
I don't see it.
I know you don't see it, but I see it has never been changed. The timing had never been changed for that because the time never changed, right? This is weird. I don't see it coming up either. So I'm going to have a word with somebody who might help. And if they can't, we'll get them fired.
As Kevin says, blame Steve.
Yeah.
We need a Steve button. We need a blame Steve button. Anytime anything goes wrong, we can push it, and he comes running like the bat phone. Right, while Still's going off to find out what's going on, I hope everyone else is here. It's probably why the attendance is a bit low at the moment, but we shall crack on regardless. Get through all the headlines. So the CEO of big shipping giant Maersk says that the China's economic rebound is going to be weaker than expected, saying that the Chinese consumer is a bit more stunned by what's happened and is not in a splurging mood right now. So bit of a warning there for China and the rebound from the COVID virus. So not sure how strong China's rebound is going to actually be. But shipping wise, they're not seeing anything major coming on there. Coming across to Japan and a little bit of data out overnight. What's going on now? Let's have a look. Where are we? Oh, I've lost my way. I've lost it. Where are we? Down here, into Monday morning. There we go. So there were some services PPI out, which rose to 1.8%, beating expectations of 1.5% year on year. It's a little bit hotter there in services inflation, PPI inflation there in the service sector. Has been a bit of an improvement in the services PMIs sector overall, so that probably goes hand in hand with that. So the other numbers there, the leading index was down a bit worse than expected, down 0.6 month to month. The index itself, though, beating expectations by a pip, though, confirming that down on the month, 96.6 versus 97.2 last month. Coming over to this morning, and we've had the IFO numbers out of Germany, and altogether not looking too bad. Business expectations rising to 91.2, current conditions 95.4, and the headline number 93.3 there. So decent numbers coming into Germany. However, there are several circles who still expect Q1 to be perhaps flat or even recessionary for Germany. We're just about to close the quarter off this week, so we'll get start getting the first Q1 numbers coming over the weeks ahead. Over in the UK, on Friday, BOE's man says that we've got quite a way, or gone quite a way, towards an appropriate level of monetary tightness. This is one of the arch hawks at the BOE. Energy prices are seen to be causing a dramatic deceleration in CPI. And her vote for a 25 pip hike this week was partly because inflation expectations had started to moderate. Now, this young lady was one of the ones who was pumping for bigger hikes at the BOE prior meetings. So her coming down to a 25 could be seen in a dovish light, as say, probably the arch hawk at the BOE MPC. ECB's Centino, a bit of a dove, says doesn't see rate hikes extending beyond what's priced in the market. Was slightly hawkish last week, given a message that hikes were to continue. ECB's DeCos taking a cautionary tone, saying decisions must be prudent amid the bank uncertainty. Decisions will depend on three factors, such as new economic and financial data and core inflation. Will also take into account the intensity of monetary policy transmission. Back to that IFO, and IFO economists came out saying that the winter recession in Germany has become more unlikely. So these lot tend to change like the weather in their economic calls. Export expectations in industry have fallen slightly, and the proportion of businesses who want to raise prices has fallen as well. So perhaps some inflationary easing to come in Germany. Moving back to last week and the data, we got Canadian retail sales coming in not too bad at all. These are all January numbers. So following what we've seen elsewhere around the globe, that it was a very good retail month in January all around. We've seen some of those numbers disappoint in the Feb readings, but Canada, as usual, lagging behind everyone else by a month. But retail sales coming in 1.4%, core sales 0.9%, so better than last month and better than expected on that front. US durable goods was out on Friday, bit of a meh reading. Core goods coming in flat, headline numbers coming in a bit soft. As you can see, they're down 1%. There was a little bit of a moving around the big ticket items, defence, aircraft, that sort of thing. But overall, not looking anything remotely, well, not good, not bad, a little bit middle of the road, flattish, we shall say. Over to the Fed, and Fed's Bostic said the need to raise rates, or the Fed needed to raise rates because inflation is still too high. And the Fed debate is not straightforward, but inflation is too high. And the rate rise was not an easy decision. Bully Bullard was out on Friday as well, saying the US response to bank stress was swift and appropriate, allowing monetary policy to focus on inflation. They did make a couple of strange comments. He said it's up to the Fed chair to make a tactical decision on the timing of the next rate increase. So a bit of a pass in the buck there. He said Fed officials' projections suggest one more hike. If the economy looks weak, the Fed will react to that. Now, Bully Bullard is one of the hawks, although again, like some others, he can change his tech like a light switch, but he is fairly hawkish, and not much hawkish from him in those comments. Definitely one who was pushing for the rate ceiling to perhaps go higher and rates to go higher than expected. So there's been a general toning down by hawks around the BOE and now the Fed. Fed's Barkin said that the case for hiking rates this week was pretty clear. The labour market is tight and inflation is still too high. Fed swaps priced out a 25 pip rate hike after everything last week as well. So we're juggling around those rate expectations. What do you make from the Fed and Bully K? Not his usual hawkish self, really.
No, and then Kashkari as well came out with a bit of a warning, not knowing yet what the banking situation will trigger or not. And yeah, those two sending out a bit of warnings, but honestly, do they know more than what we know? It's really remaining a real question, because I don't even think they do. So I guess that puts them at the same at our level, where we don't know what's going to happen next. But yeah, a bit of a warning. It's this gradual toning down of perhaps their own expectations for where the Fed's is going to end up. Am I reading a lot behind it? I don't know. As I said, it looks as if they only see the numbers when we see the numbers. But I think if you look at it, who is it? This bank who bought SVB.
Yeah.
They are going to get some support as well, if needed, funding support. So they're doing a lot to get the crisis behind them. So yeah, but I mean, specifically on Bulat, I thought Kashkari was sounding a little bit alarming. But we don't see it back in the actual market facts, right? So
Yeah.
I reckon the market is like digesting the whole thing, and then they're coming out, sending out a bit of a warning, but it's all like part of the whole thing, right? I'm not sure if I really want to read too much behind it.
Yeah, there's a lot of stuff going on, and on that SVB stuff, it looks like First Citizens bank is going to be the one that picks up all the pieces from that. They're going to assume all deposits, loans, and like you say, will additionally receive an available line of credit from the FDIC for contingent liquidity purposes. They've entered into a loss share agreement with the FDIC to provide further downside protection against potential credit losses. And First Citizens will also assume the Silicon Valley Bridge Bank, which has assets of around 110 billion, deposits of 56 billion, and loans of 72 billion. So yeah, that's given the risk a bit of a lift, because now there is someone stepping in and picking up the pieces, and it's been a bit of a drawn out affair. They've run several auctions, the FDIC, to try and offload this bank. And they've not been successful, and they've rerun them and delayed them and whatnot. So finally, someone's picking through the skeleton of this, and likely to get good support from the authorities to make sure that happens. Now, funny, we had those comments on when the Credit Suisse was kicking off, when the Saudi National Bank came out and said they will not be injecting any money or buying any more shares, and the SNB chair, Saudi National Bank chair, has resigned following those comments, probably forced to resign, because they pretty much shot themselves in the foot with that, because that was one of the snowball rollings that led to Credit Suisse, dropping in share price and everything happening. So not happy Bunny, the other shareholders at the Saudi National Bank, and he's been ousted or supposedly resigned. In other news, Russia is looking to place tactical nukes in Belarus. So a bit of a geopolitical risk headline there that came out late on Friday or Friday afternoon. So that's a situation that needs monitoring, because that potentially increases the conflict around that zone and steps it up a bit. But we'll wait to see what comes from that. Arif asks, is Deutsche Bank getting a German bailout? Well, at the moment, no, because there's, in theory, nothing wrong with them that they need a bailout. But as we know with Credit Suisse, watch this space. I still think that's all overblown regarding Deutsche. But we shall see. We thought Credit Suisse might be manageable until it wasn't. So whether they give it a bailout, I don't know. They've got all the programs in place to help out with liquidity and so on and so forth. It's Germany's biggest bank. So are they going to, or one of Germany's biggest banks, so are they going to step in? We shall wait and see. But I don't think anything's going to happen. Do you think we're over the Hump still regarding if he's back? Regarding
I'm back. But I was always here. By the way, the thing has been fixed, so the join button is now visible on the platform.
Cool.
And I have administered 10 lashes to the person who was responsible. Now back to the banking crisis. Well, Deutsche is huge. We've talked about it. The derivatives book is the biggest one by a mile. I don't think there's any reason to be worried about them. But again, we've said this so many times. This is a game of confidence. The banking sector. So when confidence starts leaving the building, deposits go, and CDS get bid up, bonds get sold. So it's a chain reaction. I don't think there should be any issues, but again, I'm not the CEO of Deutsche, so I don't know what their status is. Do I think the whole situation is contained? I don't like to use the word contained because it's usually very dangerous, but I definitely do not think this is going to be anything near what we had in 2008. There's a lot of people who were talking about these things. Yes, there are some aspects which kind of remind that situation, but really I don't think we're anywhere near that. So do I think there's going to be a little bit more volatility in the next few days? Yeah, probably. But do I think we're going to have a collapsing banking system? No, I don't.
Yeah, I'm on the same thought at the moment. I think if we can get through this week without any other things happening, I think we may be pushing it into the rearview mirror. It just depends if there's other people who've been caught by rate rises. We know SVB, what happened to them, and not hedging their interest rate risk, things like that. So, this could be another case that this current bank crisis has lasted all of a week and a half, 2 weeks. These crises, you don't get much for your money these days, do you? The COVID crisis in markets lasted about 2 weeks. The banking crisis lasted a week and a half.
Well, that's the thing.
6 month crisis.
The problem is whenever there's a crisis these days of any kind, the solution straight away by central banks and governments is let's spend. We spend. So that's what the markets are doing. They're not stupid. Anyway.
Yeah, definitely. Well, let's have a look what's coming up this week. Not a hugely busy week this week. We've got US consumer confidence tomorrow. That's the main conference board number coming in, and we get a few more of the regional surveys. As you can see in manufacturing, Dallas Fed today, Richmond tomorrow. More housing data on Wednesday. Otherwise, a fairly quiet day all round. The final consumer confidence from Europe, including the economic sentiment numbers and those price expectations, inflation expectations on Thursday. And then we get some CPI data coming in from Germany. So we'll have the regionals in the morning, then the main German number at 1 p.m. That's BST now. So that's 12 p.m. GMT. GDP from the US, I think that's the final number after trying 30 times to count it. So probably not much to worry about there. Some Japanese numbers early Friday morning, including retail sales, industrial production. Then we get German retail sales, UK GDP, again, final numbers, retail sales, Switzerland. So retail sales coming in a lot, those numbers. France CPI, and these are all flash numbers now. Then Eurozone, pan-Eurozone number, flash CPI from there. Final Michigan on Friday as well. But overall, not a busy week on the data front, so we'll be relying mainly on whatever headlines are going to drop. But given how the last couple of weeks should have been quiet and weren't, you can never say never to anything in this game. So what's going on in markets at the moment? Well, we've seen a bit of a risk bounce going on this morning. For me, it looks a bit tepid. The market's still not ready to really commit, I don't think. We've had this easing of bank stuff, so that baton might be picked up. I think it's likely it'll be picked up in the US particularly with this First Citizens takeover of SVB. That might ease some nerves over there. So I think look for the US to come in with a bit of positivity, and then maybe we'll get a second wind in European markets as well. Just having a look at what's going on in futures. So you see a little bit of a bounce, but it's not exactly rocketing in the S&P. I might be a little bit tempted to put on a little buy just before the US comes in, just to see if we do get a second wave of positivity coming in from that. NASDAQ as well, showing a bit better, but you know, we're not getting anywhere close to any of the highs last week, so maybe a little bit positive to come into there. What do you make in early doors, guys, in this risk move? Do you think it carries on in the US, and maybe that's what we're waiting for here in Europe?
Well, it feels like the markets are up because no bank blew up on the weekend. What do the Americans do when they come in? I don't know, but there's no bad news today. And that was the fear. Remember on Friday as we closed, the fear was that something bad's going to happen over the weekend, etc. So, you know, in the absence of anything, any big headlines, I don't see why the market can't continue a little bit more. Remember, I still think it's a pain trade to be so markets going up is a pain trade. I think the market's quite short. So in the absence of any kind of bad news, I think we just keep grinding higher.
Yeah, yields they've been up on Friday, but they're not exactly rocketing, are they? And there's still a bit of disparity between, you know, the current level of yields and where the Fed rate is, midpoint being right up here. What are you making of that, Kay? Is the market giving up now on the Fed?
Trying to, and that's what I was reading about, and risk is not, it's rebounding. It is rebounding. Risk is rebounding, but very, very selectively. Let's put it that way, because you see the yen is higher, the yen pairs are higher, but the Swiss pairs are not. Euro dollar is hanging in the middle there. I think the market is getting more and more worried that this couple of weeks banking crisis is going to send economies into recession now, and that's going to accelerate the tightening of the Fed and other central banks, and I think that's what the market is trying to trade. Now this week is a bit particular, right? Because we are at the end of the month, the end of the quarter, the end of the fiscal year in Japan. By the way, still no clarity at all on what's to happen on the year end in Japan. I heard some hedging seems to be a big seller of yen, but it's really sporadic here and there. I've looked at the Nikkei; it's relatively same level as where we started the fiscal year. So there's little to gain information-wise from there. Of course. There's the equity, the zero FX funds needing to rebalance when equity moves, but then there's been such huge and volatile bond moves that I have absolutely no clue right now what the end of the month or the end of the quarter should bring either in other currencies. But yeah, for the rest, I think the banking issues are not behind us, because we're going to see, I think, for instance, in Switzerland, UBS is going to strip down Credit Suisse from a lot of stuff and recover it. But that's a bit of a rebalancing act. You take out of one bank and you put it in the other bank. Still, as I said on day one, I mean, UBS has done probably the best deal in their whole existence. But will it trigger more banking regulation or other stuff? It's still, we can't say that everything is behind us. I think I fully agree with you guys. The Deutsche thing is completely overblown. But of course, we always say never, and always be ready for the unexpected. But I think it's been overblown. It's just a fact that okay, we went short one stuff, it worked. We went short the other stuff, it worked. Now let's go and see if we can short a few of the bigger names as well. I saw this morning, and that's likely why the euro is hanging around here without following sterling a bit stronger, for instance. They tried to attack, not attack, but SocGen and BNP shares were down early in the morning as well. So the market will still look for trying to force one or the other. But I think it's for the European banking sector. I would say the worst is now behind us. Yeah, and that's basically it. I think from now, is risk going to recover fully? I don't know. I mean, I've been trading sterling in and sterling yen in that way, but it's early doors in the week. Yen pairs have been very volatile. If sterling yen rises another 1%, I think that may be the end of the week as well, or the start of the week, just the recovery phase, you know.
Yeah.
But then we'll see what's to happen for the second part of the week. Again, yeah, end of quarter, end of fiscal year, and in Japan, there can be volatility coming out of a bit of nowhere. The markets are very nervous. We are seeing the US yields recover, but then if you look at all the major yields, let alone the yen, of course, because we have to wait and see what the Ueda is doing with it, and the yen yields are always slower than the rest because of YCC. But all those yields are moving in tandem. It's just one big bond market trade, right? And that's why it's very difficult to predict intraday, hour-to-hour moves. We have to really take a big step back to see where the stuff is going to go. But as you say, if this week it remains quiet, I got the impression that April could start on a very, very positive note, and then we'll see what the numbers are going to bring. Because if really the banking situation accelerated the risk, because it had an effect of tightening in credit, it had an effect of tightening the global financial conditions. If really that sends the global economy into a bit of a recession, then we're not out of the woods yet, and the volatility will continue.
Yeah, no, I absolutely agree with that. I mean, it's, you know, something like dollar yen. I'm really sitting in the middle of what to do with this one. It's not really trending anywhere. You know, I'm talking more than what it's done this month or the last couple of weeks. But you know, there's so many forces at play here. We got this banking stuff hitting risk. We got the Fed potentially slowing down. We got mixed bag of data. Some sectors doing okay, some not doing okay. The Fed worried about the fallout from the banking crisis, so you know, effectively looking to go on pause perhaps. On the Japan side, you know, we had good strong inflation that's pulled back now. We've got a new governor coming in. We've got the financial year end coming in. Everything that's going on, when I trade something like dollar yen, I like to look more longer term, and all I see is a mess at the moment. So all I'm going to do is just look and trade the stronger edges. You know, those 138s were strong enough that we were looking at. The 127s at the other end is the other area. You know, 127, 128 is the other end. We've got to look at. Maybe we get a bit of support building around 129s. Yeah, go on, mate.
Yeah, in the yen, we have Kuroda speaking tomorrow, and then we have the core Bank of Japan core CPI coming out tomorrow morning as well. So may see a bit of a move there. But I think globally, I'm starting because my base case is still that Ueda is going to try and move Japan out of YCC in a way, normalization, but it's going to be a lot slower than anywhere else has been.
Yeah.
And unless the rest collapses around Japan and the rest is really going down the pan, I'm starting to think that stuff like anywhere, it's going to be wide, but anywhere between 125 and 130 for dollar yen, and then perhaps looking at other yen crosses, I'm starting to be very tempted. We've had those attempts. We've had the worst of the crisis, sending it down to below 130 again, but then we're holding those levels, right? And I'd love to see start of, or for the end of the month or so, or start of the next month, another attempt, and then really to really be able to judge whether it's cheap below 130 or not. But I'm starting to have the impression.
What you're talking about getting in longs?
Yeah.
I think short,
as you say, for more of a medium-term play, right? So and we can talk about how to put on medium-term positions, because or how I think, or how I would do it, not wanting to teach people, but I would really start to leg in and then see if it goes down a bit more, why to leg in it to a bit more, and then if it starts to fail below and starts to go up, just add it even on the way up, you know, a bit like the silver play. But then on an FX pair, I'm starting to have that impression, you know, that it's going to take something to something fresh and new, but new on the medium to long term, to get dollar yen under 125, for instance.
Yeah, exactly. And I think, I mean, I was getting the itch, or not the itch, the inclination that perhaps at times last week we may be seeing some JPY flows, some yen flows coming in, because it wasn't moving the same way as bond yields were, and that's always a first signal when yen doesn't move as bond yields are moving. The fixes are going to be important for the next few days, because if there is, well, it's going to be a strong fixes anyway, because it is end of quarter, first quarter, as well as end of month. So irrespective of the Japanese stuff, we can always see stronger fixes around these times. So yeah, I'm going to be watching the fixes closely, you know, like the 4 o'clock fix, to see if we're going to get any signals and maybe see some moves in the yen lower down. Have you seen anything so far around the hourlies, Kay? Any moves that stand out at the moment?
No, so far the moves have been generated by another currency. If the yen pair has moved, it was on the crisis. But if you truly look at fixings, yen has not been the driver of the 4 p.m. And if you look at year-end fixings in Japan, you should monitor what happened around the Tokyo fixing, right? Because the corporates and asset managers they will trade on the London 4 p.m. as well, but we will have a pretty good idea if there is a lot to do, what's happening around 9:55 a.m. Tokyo time. Yeah,
that's always important. So if we do see, I mean, if I get a yen move down here, down to this 128, 127, and it's looking fix related or looking year end related, whatever, that's when I'm going to be interested in getting in longs, to perhaps run over, you know, risk doing a bit better, and maybe Kuroda saying that easing is going to, you know, he's out the door, but easing is going to continue. And maybe, I think Ueda's first meeting, it would be a shock if he does turn any form of hawkish in his first outing. So I'm going to be looking at that. Maybe if he is dovish and going to stick to the BOG line, that's perhaps when we may get a move up in dollar yen. But obviously, as I say, we got to keep an eye on what the US is doing, the data, so on and so forth, and the Fed. But I'll long and short, I'm looking to play the potential edges of this range, and that 127 is looking a bit juicy for me, as it was when we came down here last time. Horatio's asked a question in the Q&A. Could you talk a bit about how to develop a process and routine to become a day trader? How do you start your days? How do you incorporate it to daily life? We could probably do a whole show of that. If you're looking to trade effectively full time, trade during your days or whatever, the best piece of advice I can give, without going into a big long discussion about it, is understand why you want to trade full time. Is it to replace your income? Is it as a job? If that's the case, you've got to look at your account size, because you've got to know, you've got to be able to have the firepower to be able to trade to get what you want for your monthly money, if you like, if you're doing it as a career. And you have to look at that and say, well, what can I really achieve out of that? Because if you're trading for an income, there's a lot of pressure involved. You've got to deal with that pressure. You know, some people set targets, some people set soft targets about what they want to earn, and you have to set yourself up to be able to earn that amount. It's no good starting off with an account with 10 grand and thinking, right, I'm going to leave my job and day trade and make an income. If you've got an account like 10 grand, it's not going to happen unless you're going to be risking it big or getting lucky. So you have to make sure you've got the right firepower to do that first and foremost. And then look what you want to achieve. You know, you don't have to shoot for the stars every trade. What would be a decent income for you a month? And just aim for that, or try to aim for that. Keep your ambitions in check. As I say, don't look for a lottery win at every trade. You know, you only need to chip away small amounts. You know, you make regular money each day, each week, each month. It soon builds up. You compound your account. It builds up further. And slowly but surely you can build an income stream. But don't run before you can walk. But Horatio, give us a bit more detail in the chat about what it is you're looking to do, and obviously maybe that's something we can cover on another show. What do you guys think about it? I mean, you know, for us, we do this every day. It is daily life. Getting up, looking at the screens first thing in the morning when your eyes open, on your phone or whatever, checking the headlines, getting set. It's routine, isn't it?
It is indeed, and I think you hit the nail on the head when you said that you have to build it, and you have to, you know, don't go all guns blazing and say this is, you know, I'm going to have a 10 or 20K account and we're going to make a living out of it, because you're not. You know, start slowly, look at your statistics, write down everything that you do, and you know, see why trades are going wrong, when they're going wrong, see why they're going right, and start building like that. And when you're confident enough, because like Ryan said, you know, if you have an account that you need to grow quickly, you're going to have to take too much risk, and that mathematically will always take you to destroying the account unless you get really, really lucky. And you don't want to be making money because you're lucky. So I would say, you know, this is what I did. You know, when I came back from London, having been a market maker for 10 years and trading pretty large size, I would say, came back and started trading my own money. And I started very, very small. And the good thing I did that, because the first year was very difficult. So, you know, I would start slowly, build it, and always keep looking back at what you do, and keep revisiting trades that worked, trades that failed. This is something that people don't really do. You know, you have a good trade, you're like, oh great, you know, I'm going to the next one. Or you have a bad trade, you want to forget it straight away. Well, you know, go back and check what went wrong. You know, what was the issue, what would you do differently, etc., etc. So, you know, it's just something that you have to build and build. It's like a marriage, basically.
Yeah. How many of those you had, Stel?
On my second, but hopefully last one.
How about you, Kate? You know, you made the switch, obviously, from you know, institution to retail. It's a steep learning curve, isn't it?
Yeah, I mean, I would say two things. Well, one thing: fear and greed are the two worst enemies of a trader. If you are afraid to lose money, just don't start. If you're too greedy, you're going to blow up your account. That's a certainty. Yeah, when I made the switch over, the thing is, it all depends what you want to do. But because people say like, oh, you don't need any fundamentals, just tech and technical analysis is going to make you money. I'm still going to say that you can't become a good technical analyst without knowing the fundamentals. Because if you look at something and you just consider it numbers, it's not. It's your money that you're trading. So you need to know what kind of instruments you trade. You need to get familiar with instruments that you want to trade. And it's not because something moves that you need to be in it. And I think studying, first of all, and knowing what you're trading, knowing what makes a currency move, knowing what correlations may be, knowing a lot about stuff is more important, I think, than starting to trade really. And once you know everything, then you can start to trade. Then you can start to analyze if you want to do it on a technical basis. Then you can start to analyze and start to trade. And yeah, don't run before you can walk. Making a living of it is, as Ryan said, if you are very well disciplined, you're not going to make a living out of a 10 grand account, but you are going to able to build that account up and then start to make a living out of it once your account is bigger. I'm not going to stick a number on it because that's anyone's sensibility. But yeah, unless you live under a bridge and with free Wi-Fi from the coffee shop next door, and you don't need anything you don't have any expenses, you could live eventually out of a 25-50K account. But it's still a big ask at times, because there will be times where you hit the ball wrong. The market is not exact science. Otherwise, there would be too many people finding it too easy, and then it will make it random again. So yeah, just learn, accept that you're going to be wrong at times. If people try to put a percentage on it, but if you win at equal amounts, the ideal, well, the ratio to keep a sane mind is somewhere around 70-30, but winners and losers. But you can day trade on 65-35, 60-40, but yeah, don't overdo it. And always, as Stelios then says, revisit your trades. Why was this right? Why was this wrong? And when I was in the trade, what came out that made it change or accelerate in my favor? So there's a lot of things to consider when starting to day trade. It's not like you don't sit down with a computer in front of you and just start to trade. There's preparation work in there.
Yeah. Yeah, and Horatio adds that he's looking to make it a career. Don't need the monthly income immediately to survive, but would like to make it to where it does replace my income in the next few years. Coincidentally, and a little bit of heads up, I'll be filming the Trade Off UK with Michael Brown later today, and part of this is actually one of the subjects I'm touching on. So keep an eye on that when it comes out. Funny you mentioned it today, of all things. Horatio also adds, one of the things I found is marrying trading with my normal life. I have 4 kids and wife, and it's a full load in itself. They both seem to conflict at times, and it's hard to decide which is a priority. Yeah, well, welcome to life. What you have to do, this is where discipline comes into it. Not just discipline for your trading, but discipline in your life. Okay, if you're looking to trade as a career, then you have to be disciplined. You have to treat it like a full-time job. You know, yeah, hopefully you make enough money down the line that you can take an afternoon off and do this, do that. You know, trading becomes a luxury more than a necessity. But when you're at the start of this journey, you have to put the time in. Set yourself up properly. Get yourself an office. Set yourself up in a room. You can't trade at the kitchen table while you've got 4 kids and a wife running around screaming. It doesn't work. You can't trade in front of the telly. I get up for the last, 2023, 2010, I went back to full-time trading. I get up and I'm at my desk 7 o'clock, 7:30, pretty much every single day. You know, I'm not sitting in me pants by the telly in the mornings. I'm dressed properly in my office, a proper environment, and I'm ready to go. You've got to have that discipline in your mind, and you have to push the kids and wife aside to a certain extent. No, you can't do the fucking washing when it's the NFP. No, you can't do the shopping. No, you can't do this. You have to be a bit strict about it because it is going to be your job. You don't get that freedom when you're working in for a firm. You don't get to say, "Oh, sorry, I've got to leave because I've got to, the missus wants me to do the shopping this afternoon." That doesn't happen. And you need your family to help you with that along the way. But Gabby makes a good point. You really need to work out how much you need to live on every month if you're trading for an income, and that's correct. Now, one of the good things you look to be doing, Horatio, is you've got a bit of financial, or you've got a bit of money behind you. You don't have to rely on your trading income in the early days. So you've got a bit of a buffer. And I would say to any traders, have that buffer in your first couple of years. Have money aside that you can live, pay the bills if trading doesn't happen for you. Because it takes the pressure off. And when you're trading for your income, particularly you got a wife and 4 kids, that's a big pressure. So have that buffer if you can, but also look at things in real terms. When I first started trading my own money on the live floor, you know, everyone seemed to be in competition. You know, people were going, oh, I made 20 grand today. Oh, you know, I made 30 grand today. People would boast as they lost money. Oh, I lost 15 grand today. And yeah, great. And I'm thinking, who are these people? I'm not trading against you. I'm not competing against you. What I'm competing against is the real world. So if I walked in the morning, 7 o'clock in the morning, pit opens, ding, 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 7:30, I was 300, 400, 500 quid up. I was out the door, because that money's a mortgage for some people. What I've done in half an hour, people are working 2, 3, 4 weeks for. That's what I was competing with, real life. And it doesn't take a lot of money to change your everyday life. You make 200, 300 quid a month trading. That's some utility bills paid for. It's your mobile phone paid for. It's your broadband paid for. Build it up slowly. You know, you only need to live in the real world. Don't live in this fast cars, fast women, boats, you know, people in helicopters throwing money out of briefcases. That's not real life. Real life is what you live every day. It's what you pay for every day. Your food bill, your shopping bill, your phone bill. And that doesn't need to be a huge amount. You don't need to earn 10 grand a month to pay that off. So that's where your start point is. Make a bit of money, learn to build, compound your earnings. And then, you know, that's how I did it. That's how other guys did it. And then hopefully it may take you a few years, 4, 5, 6 years. Your account has built up. You're now trading for you know, 5% of 10K isn't a lot, but 5% of 50K then becomes something a bit more. And you build up, you build up, you build up. It's a slow process. Keep your feet on the ground, keep your risk low. And, you know, then you can become successful at this game, but it needs a discipline. You've got to put the work in. It's a profession. Anyway, that's a lesson for this week. Kay, did you want to have a look at anything before we move on? Anything particular you want to highlight?
On this, I said, you said something about competition. I mean, it's not a competition. Well, the good thing about ForexAnalytix, if I'm talking to Archibald has put a lot of stuff on there, Horatio, other people, and the thing is, the good thing with ForexAnalytix is that we don't compete against each other. We're trying to help each other. So that's one thing. And the second thing I would like to say is that you're not in competition with anyone. The thing is, it's worse. If you think that you are in competition with something or the market, you're going to lose. The market is much bigger than what we could ever get to. So the thing is you have to use it. You are a participant. You use the market to build up your position. You see where the moves are, what there is to be done. It's not a competition at all. And if somebody has an opposite view as yours or an opposite position than yours, you can talk about it. But you don't even necessarily have to let you talk out of your own position. It is not a competition. It is just something that you're on a journey, and the only thing that matters is to make your journey as comfortable as possible. It's going to be uncomfortable at times, and I've stopped. I was making markets in mostly top 10 banks around the globe in foreign exchange. So I know I have my experience, which has helped me a great deal. But I'm not in competition against anyone. I was in competition sometimes when I was sitting in the bank, because you get hammered by one or the other, and you're trying to give them back a little bit later, or you're trying to steal their clients, or vice versa. But no, this is not a competition at all. This is just trying to use the markets, or where the markets may be a little bit wrongly priced to your advantage. No, if you think it's a competition, then you're going to take it personal. Then you're going to blow up your account. It's as simple as that.
Yeah, exactly. You're only competing with the world and paying your bills. That's it. That's what you're competing with, and it's not even a competition. But it's real term stuff. But Archibald says also, but it's probably different for you guys because you made a lot of money in trading to the point you don't need to trade anymore, or even when losing small money, it doesn't feel sad like before. Yeah, but it's a long road to get here. I first went trading my own money in the 90s, and I opened up my account on the live floor. This is an international exchange. I had a $5,000 account. That's what I opened up with. You couldn't open up an account on an exchange with that amount these days, and it was a big long learning process, very big long learning process. And I wasn't making millions each day, each week, not at all. As I say, I was keeping it real. If I made 500 quid in a day, couple hundred quid in a day, boom, out the door I went. No point in trying to push it. No need to try and turn 200 quid into $2,000, 20 grand. And I just built up my account, built it up. I lived on a minimum wage in terms of, I didn't make 10 grand, take 10 grand out and go and buy cars with it. I paid the bills with it, and I built up my account. I lived on a very real modest wage while I was doing that. And that's continued to here I am now. Yes, I'm in a much better position. I don't have to rely on trading every month for my money, but that's 30 years in the making to get to this point. It doesn't happen overnight, but you use your discipline, you build an empire. That's what you're going to do. You're not going to get it in a week. Build it over years. Put the work in. It's a profession, as I keep saying. There is not many professions where you can stick money in an account and call yourself a trader. You can't go on Google and become a lawyer just from reading a few Google articles. You can't be a doctor just from reading a book on medicine. You have to put the work in to every profession. And this is no different. And the shame of this industry is that there's a lot of people who tell you that it isn't a profession. You can make money quick. So don't listen to those clowns. Listen to us. We know what we're talking about. Right. Anyway, Stel, okay.
Awesome. No, I agree with what you say, and it's very important to keep perspective and to understand that there's no free lunch, right? And there's so many people saying, you can double your money in a week and do it's all bollocks. Anyway,
yeah, it's all bollocks.
Ryan is the man, exactly.
You guys, we're all the men. Well, I think we're all men. Still wears your dress, I think. But yeah. Right, do you want to leave it there, guys? It's been a good start to the week, I think.
Yeah, so I think we've done well.
We'll keep our powder dry. You can come and check us out, obviously, in the chat room, and we'll catch up tomorrow. Unless, Kay, did you have anything in particular you wanted to show up?
Well, I've got a few things that I'm looking at. I can be very quick if you want, like just literally a couple of minutes.
Go on in. You can have 3 things. I'm gonna put a restriction here. 3 things. Pick them.
Okay.
The best one.
Sure. Okay. First of all, best one. I don't know. It's not necessarily the best one. But yeah, I'm looking at this cable. Towards last week, we are starting to break out of a little bit of a channel here, and I got the impression that sterling is still doing relatively okay. I've got just a little bit here on, and I'm going to watch what happens around 122, the figure. It's not that I'm particularly bearish dollars or ultra bullish sterling, but I'm just looking at what the sterling is doing, whether it's be on the euro sterling side, and today as well the sterling yen side. This one is a little interesting here, 122.60, 70 on the day. If we start to creep up, I think we can get back into the 123s, that on the cable. But one that is quite funny is this sterling yen. So this is the banking worries, all those spikes lower. But if you look at it, we continue to come back into this triangle. So this morning after the situation seems to have been quite down, I bought a little bit of it. I think there may be a chance to get back towards this 162 3/4, 163 zone, perhaps for as long. And I think this is now getting more and more important when the situation quiets down, for as long as we hold above 149, 159, 40, 50, for instance. And then another one here, the metals. You know, the metals have been a refuge, a safe, they call it safe haven, but really a flight to relative quality during this whole crisis thing. But there's a bit of an interesting development here on gold. I thought if there was a chance that we would be building an inverse head and shoulder here, but it's breaking down. So gold is relatively important here. 1955, 1945. These $10 range has to hold, I think, or we will see. If it doesn't hold, it will mean that the market is trading everything a little bit better. So less stress is weighing on the metals this morning. So keep an eye on this 45.55 if you want to. But then that's another $10 lower into the 1930s. But I'd say watch this zone here. Now that we seemingly start to throw the inverse head and shoulder in the bin, and we're seeing the same thing on silver. This is shorter term. We're trying to build this little channel, but we are out of it. So now we are here on the intermediate support. I think 22.85.95. We're in it, and then we'll be looking. If that gives way, then we'll be possibly looking again at mid 22s. I've let some of my longs go on this way up, as the people in the room know. I'd love to see it break below here and getting back down to lower 22s, where I'll start to get back into some slices, unless economic data really fall out of bed. Is that it? Is that my quota done?
What's the time? You want one more?
Nah, go for it, mate. Oh yeah, just one more. Dr. Cat. We broke this little how do you call it, wedge or almost triangle or whatever, but we're back testing it again. So we are here on a relatively intraday interesting level, I would say 137.20, 25. Keep an eye on that one for when the states will come in. That's it. Back to you, Ryan.
Thank you very much, mate. And yeah, well, good show today, boys and girls. Thanks for all your input into that one. And thank you to Stel and Kay for their valued input and advice as well. I hope it's given you some food for thought. Hope you all have a great week, and we shall see you tomorrow. Thank you very much, guys.
Thank you, everybody. Thanks, Kay.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.